Today we are in the sixth session of the third chapter, reconstitution of a partnership firm, admission of a new partner. So in the last class we solved one problem belongs to admission of a new partner. Now we will take one more problem, one more example from the book. It is available in page number 141, question number 51. Page number 141, question number 51. Okay. Anil and Sunil are partners sharing profits and losses in the ratio of 2:1. There are two partners, Anil and Sunil. They are sharing profits and losses in the ratio of 2:1. Their balance sheet on 31/3/16 is given. In the balance sheet, you have liabilities. You have to divide liabilities into two categories. One is internal liability, external liability. External liability means liabilities due to outsiders. Internal liabilities, liability due from firm to partners. Okay. Bills payable, external liability. Sundry creditor, external liability. Reserve fund, it is due to partners. Capital, it is due to partners. So bills payable and sundry creditor are external liabilities. Reserve fund and capitals are internal liabilities. So you just round off the internal liabilities because it goes to partners. On the asset side, you have different assets. Cash, sundry debtor, stock, furniture, building, motor car. Okay. On 1/4/2016, Vimal, new partner, admitted into partnership are the following terms. Number 1, he should bring in cash for capital rupees 40,000. Vimal should bring 40,000 rupees as his capital. Vimal is a new partner admitted into partnership. So Vimal should bring 40,000 rupees as his capital and 30,000 for goodwill. So Vimal has to give for getting admission into the partnership firm. So Vimal has to give 30,000 extra amount. That extra amount is called as a goodwill. Okay. Totally, Vimal has to pay 70,000 rupees. 40,000 rupees as capital and 30,000 rupees as a goodwill. So in the last class, I told you about goodwill. When the goodwill is brought by the new partner, just you have to make an entry here. On the credit side of partner's capital account, you have to make an entry by goodwill and divide that goodwill among the old partner. Goodwill brought by the new partner is divided among the old partner and it is added to partner's account. It is added to partner's account means you have to show on the credit side of partner's capital account. Okay. But in this problem, we have an extra adjustment. Goodwill is brought by new partner. In the previous class, in the previous problem, just we did goodwill is brought by the new partner. But in this problem, goodwill is brought by the new partner 30,000 rupees in cash and half of the goodwill amount is withdrawn. One more extra entry you will get. One extra entry you will get. That will do the extra entry. Okay. Next, half of the goodwill amount is withdrawn by the old partners. So goodwill is added to old partners capital account. Out of that amount, the old partners will withdraw half amount. Okay. Next. So the first adjustment belongs to capital brought by the new partner and goodwill brought by the new partner. Second adjustment belongs to half goodwill amount is withdrawn by the old partners. Okay. Third adjustment. Building revalued rupees 60,000. Building revalued. Revalued means you have to revalue it. What is the value of the building in the balance sheet? 56,000. Revalue means you have to take the difference between balance sheet value and adjustment value. What is the building value in the balance sheet? 56,000. It is revalued as 66,000. At the time of admission of a partner, it is revalued as 66,000. So in the balance sheet, the value is 56,000. But as per adjustment, at the time of admission of a new partner, the value is 66,000. So building value is increased. Building value is increased. What you have to show in revaluation account? Your question is, you have to prepare revaluation account. 1. Number 2, partners capital account. Number 3, new balance sheet. See, here balance sheet is given. Old balance sheet of two partner, Anil and Sunil. And you have to prepare the new balance sheet of Anil, Sunil and Vimal. Okay. So 3 accounts you have to go. 2 accounts and 1 balance sheet you have to prepare. Revaluation account, partners capital account, new balance sheet of Anil, Sunil and Vimal. In the revaluation account, you have to show losses and expenses on the debit side, income on the credit side. Expenses, losses on the debit side, income on the credit side. How you will get expenses and losses? Decrease in asset, increase in liability. Decrease in asset, increase in liability, loss. Show on the debit side. Increase in asset, decrease in liability. Increase in asset, decrease in liability, income, show on the assets. Here, credit side. Okay. If you get loss, show on the debit side. If you get income from assets, show on the credit side. So, third adjustment. Building revalued rupees 66,000. Revalued means you should not take the full value 66,000 there. You have to take only the difference amount, how much increase it is. So, building value is 56,000. As per adjustment, it is revalued 66,000. 10,000 rupees is increase. Building value increase means income. Okay, you have to show credit side. By building 66,000 minus 56,000. How much increased? 10,000 rupees. Don't take full amount. Revalued means you have to take the difference between balance sheet value and adjustment value. Balance sheet 56,000, adjustment 66,000. So revalued balance sheet value 56, adjustment value 66. In the adjustment, the value is increased by 10,000. 10,000 is the income. Okay. Next, provision for legal charges rupees 700. Firm has to pay legal charges rupees 700. Firm has to pay, not paid. Firm has to make a provision for legal charges rupees 700. Just provision for means they have to keep 700 rupees for legal charges. So it is an expenses. Legal charges, giving legal charges is an expenses. Show on the debit side. 2. Provision for legal charges. ₹700. That is third adjustment is over. Come to the fourth one. Stock and motor car depreciated by 10%. Stock value and motor car value decrease by 10%. Stock, asset, value decrease. Motor car, asset, its value decrease. So asset value decrease means loss. Asset value, building is an asset. Building value increase, income. We have shown on the credit side. Stock and motor car, both are asset. Their value decrease, loss. Show on the debit side. 2. Stock. How much depreciated? Depreciated by 10%. See, stock is 32,000. 32,000 into 10%. 3,200. Motor car. Motor car also depreciated by 10%. Motor car value 10,000. 10,000 into 10%, 1,000. So this adjustment is also over. Okay, next. Provide for doubtful debts 5% on debtors. See, debtors, sundry debtor 30,000. You have to get money from debtors 30,000. Firm has to receive 30,000 rupees from debtors. Out of 30,000, 5% is doubt. The recovery from debtors is doubtful. That means you may get or you may not get. It is a loss. When you have doubtful debts or bad debts, it is considered as a loss. It is taken as a loss. So money due from debtors is 30,000. Out of that, 5% you may not get, or there is the recovery of that amount is doubtful, means it is a loss. Show on the debit side. 2. Doubtful debts. $30,000 into 5%, 1,500. Okay, so we have taken the last entry. Now, so revaluation account. First, you have to prepare revaluation account. Revaluation entries where you will get? You will get from the adjustment. See, first adjustment belongs to capital and goodwill. Don't take in revaluation account. Second adjustment, half of the goodwill withdrawn. That also don't take in revaluation account. They are not belong to assets. Third adjustment, building revalued. Building value increased here, take on the credit side. The provision for legal charges expenses, take on the debit side. Stock and motor car depreciated loss, take on the debit side. Provide for doubtful debt 5% on debtor is a loss, take on the debit side. So we have taken all the entries, revaluation entries. See the value here. On the debit side, you have loss. 3,900, 4,900, 5,400, 6,400 is the loss. But income is 10,000. Write the income, 10,000. Here also write 10,000. From 10,000, deduct these losses. 2,500, 5,500, 5,700, 6,400. So loss is profit. Here income is 10,000. Loss is 6,400. Remaining profit is profit transferred to partners. 3,600. This is transferred to partners. Anil, Sunil. 3,600 into the ratio is 2:3. Anil ratio 2. Total 3. 2,400. 3,600 into Sunil ratio is 1, total 3. 1,200. So profit is divided among partner. Anil 2,400, Sunil 1,200. Now we have to prepare revaluation account. Keep in mind, in revaluation account, you have to make 6 entries. Total 6 entries. First entry, capital. Capital you will get from the balance sheet. Anil capital is 60,000, Sunil capital is 50,000. That capital you have to show on the credit side. Okay, capital 60,000 and 50,000. By balance brought down. By balance brought down, capital is 60,000 and 50,000. That you have to show on the credit side. First entry. Second entry, reserve fund. See in the balance sheet, reserve fund is given. This entry also you have to take on the credit side. Reserve fund entry, credit side. Okay, credit side. Reserve fund, how much? 9,000. This 9,000 you have to divide between these two old partners because the reserve fund belongs to old partners, Anil and Sunil. 9,000 you have to divide in 2:1 ratio. 9,000 into 2 divided by 3, 6,000. 9,000 into 1 divided by 3, 3,000. So reserve fund 6,000, 3,000. Third entry, profit and loss account. If there is any profit and loss account in the balance sheet, that you have to divide among partners. If the profit and loss is given on liability side, take on the credit side. If the profit and loss account is given on the asset side, it is a loss, take on the debit side. Okay. So we'll continue with the partners capital account. In partners capital account, you have to take 6 entries. Totally 6 entries. 6. Okay. First entry you have to take capital. Capital of partners. See capital, Anil and Sunil capital. So that entry you have to show on the credit side. By balance brought down 60,000 and 50,000. 60,000, 50,000. Second entry you have to take reserve fund given on the liability side. This reserve fund you have to divide among partners. 9,000 rupees. It is old. It belongs to old partners, Anil and Sunil. Divide among old partners only. 9,000 divided in 2:1 ratio. 9,000 into 2, total 3. 9,000 into 1, total 3. Okay. So now that you have to show on the credit side. Reserve fund entry, credit side. By reserve fund, 9,000 into 2/3, 6,000. 9,000 into 1/3, 3,000. Third entry, profit and loss account. If it is given in the balance sheet, liability side, take on the credit side. If it is given on the asset side, it is a loss, take on the debit side. But in this problem, there is no profit and loss account. Fourth entry, revaluation account. Revaluation. You just did revaluation account. If you get profit, take on the credit side. Fourth entry. If you get loss, take on the debit side. In this problem, there is a profit, 2,400 and 1,600. Take on the credit side. By revaluation account, 2,400, 1,200. Fourth entry is over. Fifth entry, goodwill. New partner brought goodwill. Take on the credit side. Divide among old partners. New partner brought goodwill. That goodwill is divided among old partners. Okay. So new partner brought goodwill, 30,000 rupees. That goodwill is divided among old partners. and it is added to their account. Credit side by goodwill account 30,000 divided in 2:1 ratio, divided by 30,000 into 2 by 3, 30,000 into 1 by 3, 20,000, 10,000. So in the last problem, just goodwill is brought by new partner, just you have to make one entry on the credit side. But in this problem, goodwill is brought by new partner and withdrawn by old partners. Withdrawn by old partners means again you have to make an entry on the debit side. Okay, just goodwill is brought by new partner means just you have to make an entry on the credit side. Divide goodwill among old partners. If it is withdrawn by old partners, take entry on the debit side. If the full amount is withdrawn, take full amount 20 and 10. If the half amount is withdrawn, take half amount, 2 cash account, 10,000 and 5,000. Okay, in this problem, half amount is withdrawn. Second adjustment, half of the goodwill amount is withdrawn by old partners. So see, goodwill amount 20,000, 10,000, it is added to partners account. Out of their account, partners withdrawn money. Anil withdrawn 10,000, deduct 10,000. Sunil withdrawn 5,000, deduct 5,000. If it is not withdrawn, don't take this entry. If the goodwill is brought by new partner, take entry on the credit side. If it is not withdrawn, only one entry, only credit side. If it is withdrawn, again you have to make on the debit side entry. Okay, full amount withdrawn means take full amount. Half amount withdrawn means take half amount. Last entry, partners, new partner capital. New partner brought 40,000 rupees capital. That you have to add to new partner account, credit side. By cash account, 40,000 rupees. Okay, these are the 6 entries. First entry, capital, by balance brought on credit side. Reserve fund, divide among partners, right on the credit side. Third entry, profit and loss account. Given on the liability side means take on the credit side. Given on the asset side means take on the debit side. Fourth entry, revaluation. Loss, debit side. Profit, credit side. Fifth entry, goodwill. If goodwill brought by new partner, take on the credit side. If it is withdrawn, take again on the debit side. Half withdrawn means take half amount. Last entry, new partner capital. By cash account, 43. Take a total of credit side. Credit side total is 40, 64, 200, 88, 200, 400. Same total take on the debit side, 88, 400, 64, 200, 40,000. From this total, deduct this 10,000 rupees he has withdrawn. 88, 400 is there in Anil account. He has withdrawn 10,000, 78, 400. Sunil, 64, 200 in his account. 5,000 he has withdrawn, 59, 200. So, Vimal, 40,000. Next you have to prepare cash account. In cash account, you have to show the cash. Cash is 4,000. Before admission of a partner, cash was 4,000. To balance brought down 4,000. Now cash is a real account. Cash comes in right on the debit side. Cash goes out right on the credit side. Total 70,000 rupees comes into business from new partner. So that right on the debit side. To new partner capital. Vimal capital 40. Vimal brought goodwill 30. Total 70,000 rupees comes in. Earlier 4,000 rupees was there. 70,000 rupees comes in from new partner. Total 74. Out of 74,000 rupees, partner withdrawn money. Money goes out. Okay. Anil withdrawn 10,000. Sunil withdrawn 5,000. This withdrawn amount means cash goes out right on the credit side. By Anil capital 10,000. By Sunil capital 5,000. Total 74. From 74, 15,000 rupees withdrawn, 59,000. By balance carried on 59,000. Earlier they had 4,000 rupees. Total money comes into business 70,000, 74. Money goes out from business 10,000 and 5,000. Withdrawn by partners 15,000. Balance money is 59. So this 59 you have to show in the new balance sheet. Okay. So keep in mind goodwill treatment. If the goodwill is brought by new partner, then you have to make entry on the credit side and cash account debit side. Only one entry on the credit side of partner capital account and cash account debit side. Okay, that's enough. If goodwill is brought by new partner and withdrawn, you have to make entry on the credit side, cash account debit side to goodwill. Again, in partner's capital account, to cash account, partner has withdrawn money, in cash account by partner's capital account. 4 entries you have to make. If partners has withdrawn, new partner has brought goodwill, you have to make 2 entries, partner's capital account credit side, cash account debit side. If partner has brought goodwill and withdrawn by old partner, you have to make 4 entries, partner's capital account credit side, cash account debit side, capital account debit side, partners cash account credit side. 4 entries you have to make. Yes, last class, in the last problem, we had only new partner brought goodwill. Only we have made 2 entries. Goodwill, buy goodwill, to goodwill. In this problem, new partner has brought goodwill and withdrawn by old partners. Buy goodwill, to goodwill, to cash, by partners capital. Okay. Now we will take a balance sheet. New balance sheet. Anil, Sunil, Vimal as on 1/4/16. Liabilities, rupees. Assets, rupees. Don't write debit and credit. Now we have to take these values. Old values, if there is a loss, deduct it. If there is an income, add it. Cash before admission 4,000. After admission as per cash account 59,000. So in the new balance sheet you have to take 59,000. Sundry debtor, money due from debtor is 30,000. Out of that 1,500 you may not get. Loss, deduct it. Debtor 30 minus doubtful 1,500. 28. Stock 32. Out of 32,000, 3,200 is loss. Okay. So from assets, losses you have to deduct, income you have to add. Stock 32,000, 3,200 you may not get. Deduct it. Stock 32 less depreciation 3,200. 28, 8. Furniture, there is no loss, no income. Take as it is. 8,000. Building, 56,000. There is an increase, 10,000. Increase, add it. Okay. Losses, you have to deduct. Income, you have to add. Building. 56. Add appreciation 10, 66. Motor car 10,000, 1,000 rupees is a loss. Minus. Loss 1,000 minus 10 less depreciation 1,000. 9,000. Okay. Cash earlier 4,000. After admission of a partner 59,000. Debtor 30 minus 1,500. Stock 32 minus 3,200. Furniture as it is. Building 56. Add 10,000 rupees. Motor car 10,000 minus 1,000 rupees. So we have taken all. Now liabilities. Bills payable no change as it is. 16. Creditors also no change as it is. 5,000. See, we have taken bills payable 16,000, creditors 5,000. Reserve fund, don't take it because it is transferred to partner's account. It is divided among partner. Don't take it. It is already added to partner's capital account. It is not a liability now. Okay. Capitals, Anil and Sunil. Don't take this old capital. Take new capital from capital account. Capital. Anil 78 400, Sunil 59 200, Vimal 40. This is the capital. So we have taken all the entries. Now last we have to see the adjustment. Is there any outstanding liability? Provision for legal charges. Firm has to pay 700 rupees legal charges. That you have shown it as expenses in revaluation account. It is not yet paid. Again, it is not yet paid, so it is again liability. 700 rupees liability that you have to show. Provision for legal charges. 700 total. Plus 5 plus 78 400 plus 59 200 plus 40 plus 70. 1 lakh 99 300. Here also 59 plus 28 500 plus 28 800 plus 8 plus 66 plus 9000. 1 lakh 99 300. Okay. So you have in this problem you have to learn about the treatment of goodwill. Very important. Goodwill treatment. First problem, just new partner brought goodwill. You have to show on the credit side and cash upon debit side. In second problem, goodwill is brought by new partner, withdrawn by old partner. 4 entries. Partner's capital account credit side, cash account debit side. Partner's capital account debit side has 2 cash, in cash account by partner's capital account. So last class goodwill treatment, case number 1, goodwill is brought by new partner. Today's class goodwill treatment, case number 2, goodwill brought by new partner and withdrawn by old partners. Just you have to learn about this treatment of goodwill. Very important. So many students will make mistakes in treatment of goodwill. So you have to learn the treatment of goodwill and you have to learn the revaluation. See, building, you should not take full value 66,000. Revalued means difference value. If it is increased, take on the credit side. If it is decreased, take on the debit side. And if it is percentage is given regarding depreciation of assets, loss, debit side. Appreciation of assets, credit side. If there is an outstanding expenses, debit side. Just you have to learn about the revaluation of assets and liabilities and treatment of goodwill. Okay. So this is the second problem. Next problem we will solve in the next class. Thank you.